Where is that $130 billion copper market headed next? Industry just wrapped up its most important conference in Chile last week, and joining me now is Nick Snowdon of Barclays Capital from London. And Nick, my goodness, copper just tanking in London trade today. Why?
Well, I mean, I think the key message right now is short-term demand concerns over China. Really, we haven't seen an improvement in industrial activity in China since the beginning of the year. And as a result, we've seen a big build in raw material stocks, but also finished good materials. So right now, I think the market is really concerned about what's going to happen in China over the next couple of months.
So you are concerned about fundamental demand, because if you look at some of the technical analysis, you can see that there are not only hedge funds cutting bets, but based on, say, like the Elliott wave theory and some of the other real technical trades, that there is this conviction that the metal's going to pull back.
Yeah, I mean, I think our view is that there is potential in the near term for lower copper prices, but I don't think we should get too carried away. I mean, I think there are two key supports that are going to prevent prices coming off too far. The first is China. We still have a view that the Chinese economy is going to achieve a soft landing. So that means in the second half of the year, you are going to see a re-acceleration in growth and demand conditions improving. I mean, I think secondly, very important, is the supply side of the copper market still remains in pretty poor shape. You know, when we were speaking with producers down in Chile, the message is issues like lower ore grades, shortage of skilled labor, severe power shortages. You know, that's really going to hold back the supply side as well. So that's going to keep the market pretty tight.
When you look at the miners who have to get this stuff up out of the ground, there are also some constraints with permitting, with just the quality of the metal being extracted. What effect is that going to have? Well,
I mean, I think that's best demonstrated in terms of Peru, you know, where you've seen some serious issues in terms of environmental and social hurdles. And that's not really important for the near term. But I think looking down 2 to 3 years along the supply side, because of these permitting issues, you're going to see fewer and fewer projects coming online because of the delays this creates. So, you know, it's creating a tighter copper market balance in 2 to 3 years' time.
So can you give us a sense of your near-term and longer-term price targets for the metal?
Well, I think near-term, you could see LME prices coming off you know, $300 to $400 from current levels if you don't see a pickup in Chinese demand near term. But I think in the second half of the year, you know, assuming you get that soft landing in China and the supply side remains very tight, you know, we see a pickup back above the $9,000 per ton level. So it's all about picking the low point in Q2 for that stronger second half for copper prices.
Quickly, before I let you go, the one factor we haven't talked about are central bank supports here, pumping in lots of liquidity to the global markets. Are you expecting more support to be given through to the metals through this, through inflation?
I mean, I don't think that's a key driver for the base metals. You know, certainly for the precious metals and gold, that's an important support for prices. But base metals, you know, really supported by you know, supply-demand fundamentals, and so I don't think that we see quantitative easing in the US or elsewhere as important for how copper prices perform this year.
Got it. And Nick, I believe you're in New York, not London today.
Yes, in New York, yes.
All right. I think I said you're in London on the introduction there. We got to leave it